Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Tuesday, the 20th of February in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, two Rothschild bank clans fight over clients, power and the family name. We have a special report.
Capital One agrees to buy Discover in a $35.3 billion deal.
And in need of a recharge, China's EV dominance forces Europe to reboot its car industry.
Let's start with a roundup of our top stories.
After decades of occupying different business areas, the last two remaining banks with links to the storied Rothschild name are encroaching on each other's territory. Bloomberg's Tiwa Adebayo has the story.
Compared to the biggest global players, Swiss private bank Edmond de Rothschild Group and rival Paris-based Rothschild & Co. are minnows in the $250 trillion global wealth management industry. But 5 years after a bitter legal dispute over use of the family name, some analysts say a merger is looking more likely as the two increasingly compete in the cutthroat investment banking and wealth management industries. At the end of 2022, a combined Rothschild firm would have had about $280 billion in assets under management. A merger has previously been proposed by the French side, but rebuffed by the Swiss. Neither Rothschild firm chose to comment on the matter. In London, Tiwa Adebayo, Bloomberg Radio.
Capital One is buying Discover in the largest global takeover deal of the year so far. The tie-up brings together two US consumer finance brands, with the combined firm surpassing long-time rivals JP Morgan and Citigroup in the market. More now from Bloomberg's Doug Krisner.
It's an all-stock deal valued at $35.3 billion, and it creates the largest U.S. credit card company by loan volume. Historically, Capital One has catered to subprime customers who carry a balance on their cards each month. In recent years, the bank's been trying to attract premium customers. Discover has long focused on prime customers with better credit ratings. This deal comes after major declines in Discover shares during the second half of last year. It followed a warning on lapses in compliance. The issue ultimately led to the resignation of then CEO Roger Hochschild. In New York, I'm Doug Krisner, Bloomberg Radio.
China has ramped up support for the troubled property sector with its biggest ever cut to a key mortgage reference rate. Chinese lenders slashed their 5-year loan prime rate by 25 basis points to 3.95%. Head of China Financial and Property Research at Jefferies, Shujin Chen, says the move shows Beijing is focused on curbing contagion risks from the property sector, but they will need to do more.
China is doing little by little and loosening purchase restrictions and also providing more supportive or more liquidity injection into the property developers. But unfortunately, we haven't seen significant support to stabilize the expectation of property price at this moment.
Shujin Chen's analysis was reflected in the markets, with the move failing to lift sentiments. China's benchmark CSI 300 index dipped on the news.
Profits at the mining giant BHP have slumped by 86% in the first half of the financial year. That's as oversupply in the nickel market forced the company to write down key holdings, including a $2.5 billion charge on the value of its Australian assets. Global supplies of the metal have ballooned due to ramped up production, causing benchmark nickel prices to fall. Despite the disruption, though, the CEO Mike Henry says that BHP still achieved growth.
In terms of underlying operations and financial performance, it was a really strong half. We had EBITDA up by 5%, net operating cash flow up by a whole 30%. Balance sheet remains strong with net debt at $12.6 billion. And all of that has allowed us to declare an interim dividend of 72 US cents per share. Now, yes, we have had a couple of exceptionals, including in our nickel business. By way of a bit of context, the nickel business is the smallest by some margin business within the BHP portfolio.
So Mike Henry there saying that nickel is only a minor part of the miners' business interests. BHP says that it is on track to meet targets, with demand in China and India remaining stable.
Bayer plans to slash its dividend by 95% as it tries to recover from a $63 billion takeover of Monsanto. The drug and crop giant is dealing with thousands of lawsuits over the weed killer Roundup. The German company's stock has fallen by more than 70% since it completed the takeover.
Now, the hacker group, which disrupted the $26 billion US Treasury market, has now had its own website compromised. Lockbit held the world's largest lender, the Industrial and Commercial Bank of China, to ransom last year. Bloomberg's James Wilcock has more on the crackdown by authorities.
If you were to go to Lockbit's site on the dark web this morning, you'd see a note saying it's now under the control of the UK's National Crime Agency, with more info to come later. It's a rare public success for authorities cracking down on cybercrime. The gang is the world's most prolific hacking group, with the FBI tracking 144 million ransoms paid. Part of its success comes from its franchise model, where it uses affiliate groups to conduct hacks. Those affiliate groups reportedly received their own message from law enforcement. We have your information and may be in touch very soon. Have a nice day. In London, James Wilcock, Bloomberg Radio.
Now, in a moment, the two feuding sides of the Rothschild banking dynasty face increasing commercial pressure to merge. But would Ariane de Rothschild, who controls the Swiss arm, ever be persuaded, is the topic of one of our big reads this morning. And our Paris banking reporter will be joining us on that in just a moment. But this also caught my eye. Bloomberg's latest Markets Live Pulse survey. Worrying reading for junk food makers. Companies that make unhealthy food should course correct now, thanks to the growing popularity of weight loss drugs. So apparently it's already affecting the makers of snack foods, and investors have really quite strong views about it.
Yeah, 3 out of 4 respondents to the survey say that companies making or marketing these kind of foods should shrink portion sizes, adjust recipes, or just offload the assets altogether. Only a quarter of the some 300 respondents think that big food can wait out the new threat from appetite-suppressing drugs. Remember a couple of weeks ago we were reporting about some of these food makers calling in a panic to the CEO of Novo Nordisk about what effect the likes of their drug Ozempic would have on the food industry. Yeah,
absolutely. And of course, this at the stage where they're injectable, I think there's even more concern from kind of large agri-businesses, food processing businesses, if the appetite suppressant drugs actually just become a pill form, because that, could perhaps have wider appeal. Maybe if, like me, you're not a fan of injections.
No, indeed. An interesting read this morning anyway from our Markets Live team. Let's turn though to our reporting around the Rothschild family, a name synonymous with high-end banking. 2 branches, one in Switzerland, one in France. Now, the French arm of the family is increasingly calling on similar clients in global wealth management, the Swiss, setting up a duel that those inside and outside the two firms say will only lead to a merger. Joining us now with the details is our Paris banking reporter, Alex Rajbandari. Alex, good morning to you. So explain, first of all, the 2 branches we're talking about here. There are 2 branches of this dynasty, one in Switzerland and one in France.
Hey, good morning. Yes, indeed, the 2 branches are what is remaining of the global dynasty that emerged in the 18th century in Frankfurt, when Mayer Amschel Rothschild sent sons across Europe to spawn an empire that would finance kingdoms and empires across Europe. The Paris branch was a success story and merged with the UK one over the past decades, and is now run by Alexander Rothschild, who's 43 and 7th generation scion. It's more specialized in corporate banking, but is aggressively growing in the wealth management industry, which is where the Swiss branch, which is relatively new, is specialized in. That branch was founded in 1953 by Edmond and is now run by his daughter-in-law, Ariane de Rothschild.
So then, Ariane de Rothschild, there's also been a court case fairly recently. What is her plan for the business in Switzerland, for succession, and this whole idea of the possibility of a merger?
So indeed, relating to the court matter, it was all focusing on the use of the name, because both firms are trying to leverage the Rothschild name that exudes wealth and power to attract the wealthy clients. That creates a lot of confusion among clients, even more so that branches sometimes are a short walk away, one from the other, like in Bordeaux or Toulouse in France, or even on the same street, like in Madrid. So the matter came to the courts in 2015, was settled in 2018. Now there are rules on how to use the names. But eventually, the French had approached the Swiss side for a rapprochement, and Ariane has repeatedly declined, even though she's facing corporate upheaval with 3 CEOs in 5 years. And she's grappling with succession issues after the sudden death of her husband, Benjamin de Rothschild, in 2021 at age 57. Officially, she says the succession is ensured by her daughters, but it isn't clear for now how involved they are with the business.
Talk to us about this speculation or this consideration of a potential merger. Both businesses are now focusing on global wealth management. There are very big players in that industry. Can they survive independently?
So indeed, the firms remain relatively small compared to giants like UBS and Morgan Stanley. And there's a rule for, need for scale in this industry in order to grow even further. So observers and people familiar believe that the odds for a merger are increasing because of, all the issues we mentioned on the Swiss side. At the end 2022, eventually, a combined entity would have 280 billion assets in under management. That remains small compared to global giants, but indeed, it actually would allow them to leapfrog Pictet or Lombard Odier or even Vontobel in Switzerland. So that would not be an insignificant move.
How likely do we think that is, given the sort of personal, familial nature of what seems to still be a bit of a feud? Neither side commented for this long read that you've written, Alex.
Yes, indeed. It's quite complicated for them to comment on this because it's even if it relates to business, it remains family matters. Look, it's complicated to say whether how the odds are, but really, if history is an indication, the two branches have managed to work together more or less harmoniously in the wine business. The representatives of both branches were owners of the Château Lafite in Bordeaux, which is a very renowned vineyard, and they created the Champagne brand together in 2005. So it remains to be seen if they can work together in banking now.
Okay, Alex Rajbandari in Paris, thank you very much for joining us. You can read that full story on the Bloomberg website or NI Big Takes, the function on the terminal.
Well, now let's move to the automotive industry, where cheaper Chinese electric vehicles are putting pressure on the big traditional automakers in Europe, coupled with a slowdown in demand for EVs overall. Volkswagen, Renault and Stellantis are exploring tie-ups with sworn competitors, it seems, to make cheaper electric vehicles and to fend off existential threats. Our transport reporter Albertina Torsoli is following this story very closely. She joins us now. Great to have you with us, Albertina. What's been causing the EV slowdown, first of all? Where do the car makers in Europe now stand?
We've been tracking the story for months, and yes, there is an EV slowdown, and probably 2024 will be a critical year for the industry. You mentioned Europe, but obviously also in the US. There are various reasons for this slowdown in demand of electric vehicles. I would say the main one is the high price of these vehicles. Electric vehicles are much more expensive, or were much more expensive until now, versus, comparable combustion engines. There is a variety of reasons for that. The metals that go into a battery are just extremely rare and expensive themselves. But obviously, we're also coming from a period of history that saw massive supply chain snags due to, for example, COVID or the war in Ukraine. Meaning that in the past few years, many car makers, boosted the prices of these EVs because there was a shortage of cars. And, as always, when there is a shortage, the prices go up. The problem is that this has coincided with a real cost of living crisis. I can think of many European countries where inflation ballooned in the past few years. And at the same time, a sense that governments aren't really 100% sure now the way they want to go with the electrification process. There was a big debate last year in Europe over e-fuels. So when you add it all up, the technology that isn't there yet, the high price and regulatory uncertainty, this is clearly leading to a wait-and-see attitude among consumers.
Okay, so a crucial time for these car makers then. What are the options on the table for companies like Renault, Volkswagen and Stellantis?
There are various options on the table. The point is that what is clear to everybody today is that, as one executive put it, there is a colossal strategic threat coming from lower-priced Chinese car makers that are increasingly penetrating the market. And basically, going it alone is really no longer an option for many of these companies. I am thinking of Renault, the maker of Dacia cars and Renault cars, and Volkswagen. I mean, the giant was a giant, Volkswagen, but it's a giant that has had many difficult months behind. The two companies right now are engaged in talks over a platform, so to share full resources to share the cost of developing cheaper cars. When I say cheaper EVs, I mean EVs that are roughly 20 sub or 20,000 euros or below that price. Basically, not that far from the cost of combustion engines. And it's just impossible to go it alone and to manage to produce quickly cheaper EVs on your own. Yeah. Other companies have other options. Stellantis, for example, has talked about potential M&A.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.